Good morning, everybody, and welcome to Wise Tech for Wise Money, the podcast where we speak with founders, operators, investors, and business leaders who are actively building real businesses through execution, discipline, and intelligent growth. I'm Gary Wayne, founder of A1 Solutions. At A1, we help businesses grow by combining commercial strategy, practical AI automation, better systems, and sharper positioning. Today I'm joined by Kenneth Chandler, Vice President of Asset Management at Willowood Group, a privately owned Texas real estate investment firm focused on multifamily apartment communities. Kenny's journey is particularly interesting because it's been built from the ground up. Before moving into the institutional environment at Willowood, he spent years as an owner-operator across multifamily industrial, mobile home parks and hotels. That journey includes Texan Ranch Apartments in McAllen, a distinctive 20-acre residential community combining apartments, extended stay RVs, accommodation and extensive resident amenities. That hands-on experience also led Kenny to write his book, The Operator's Playbook, which began as an internal manual designed to train property managers, standardize execution, and build accountability at property level. What makes this conversation valuable is that Kenny understands both sides of real estate: the institutional discipline of portfolio strategy, reporting and capital allocation, and the operational reality of tenants, teams and maintenance, construction, capex, and day-to-day execution. Well, that was a great long introduction to you, Ken. It's great to
No,
have you on the
that was
show.
great.
Yeah, it's really good to have you here, mate, and it's good that
No,
you've
no,
been on
thank
both
you.
sides of the equation. You know, you've got a lot to offer, and it'd be interesting to hear your story. If we start by your background, how you first got into real estate, and what led you to join Willowood.
Man, that's a long history, so I'll try to make it as short and concise as possible. I guess I started, in the financial world, graduating the University of Hawaii. I worked for Merrill Lynch as an analyst for about 7 months, and I got a call from some older contacts that were, on the board of the high school that I used to attend. They're investors, somewhere in oil and gas, somewhere in real estate, and so they give me a call up and they said, "Hey, we hear you're working at Merrill Lynch in Hawaii. How do you like it?" And for lack of a better word, I said, "I effing hate my job. I'm sitting in a cubicle. This isn't what I thought I'd be doing."
Even in Hawaii.
Yeah, even though it was in Hawaii, we had a little bit of conversation, and one of the individuals said, "Hey, we have a situation we'd love for you to come and help us out with." They had an apartment complex in the oil field in the Eagle Ford Shale that was burning about 10K a month. They had like a 6-month runway. They're like, "Why don't you come over here? We'll give you full autonomy. You try to turn this asset around." I had no experience in real estate. So I gave a list of demands, and they met my demands. So I'm pretty sure I left some money on the table there. But nonetheless, I'm a man of my word. So I got on the plane and went to Dilley, Texas, in the middle of nowhere. And there was no Wi-Fi, no restaurants. There was nothing. So dropped me off there. And that's where I started my journey. I was 23, and I did what any young 23-year-old does. They think they know everything. So, I had a team of individuals working for me, and immediately I was like, "Hey, we're going to fire everybody because I know how to do everything. I can turn units and rent units and cut grass and paint, and I can do it all." Quickly learned that being a one-man army is not the most efficient way to operate, but it gave me the ability to really understand the business from the inside out. Of course, naturally, after letting everybody go, the business turned around almost instantly if you just stop the flow of money. About 6 months after that, we sold the complex, and then the investors kind of got together and said, "Hey, let's 1031 this, and let's go and start buying some more. And so I've had the very fortunate opportunity to work with them and partner with them. And so, we started our own kind of private equity firm on a much smaller scale than Willowood, and much more diversified. So, we didn't have quite a bit of a strategy, if you will. It was more like, let's find the best deal we can in the best area and something that we like. So we dealt in everything: apartments, single family rentals, some flex space, some hotels that we converted into apartment complexes, which I'd probably never do again because that was a nightmare. Mobile home parks, RV parks. So that's how we kind of grew into that space.
Tell me how did you cope with such a steep learning curve? Obviously,
It
never
was,
been in real estate, but obviously you must have done a great job because the investors loved you.
you know, they gave me the opportunity to just kind of throw me in the ocean and say, swim. But they were very gracious in allowing me to sit at the helm. They backed a lot of my decisions when they didn't have to. They gave me the grace to learn. So I'm very thankful for that. I think the flip side is I care. I'm sure there's a lot of other people that care, but I have a lot of pride in my work. So I will stay up late at night and solve the problems. And if I created a problem, I'm going to put my money and I'm going to fix it. And I think over the long term, investors and partners really appreciated that and understood that I was being transparent in all my dealings. So if something wasn't working, I got in the front of it and said, hey, guys, I made a mistake here. This isn't working. We need to pivot. And I think that gave me a lot of not only credibility, but grace. So I'm very fortunate too. The investors I work with were willing to work with me.
Where was you born? Where did you actually come from? Did you come from Hawaii?
No, no, no. I'm a Texas born and raised.
Oh, right, okay.
I went to Hawaii because I was in the pre-officer initiative program for the Coast Guard, and then I had an opportunity to kind of exit that. The university kind of helped me out and gave me a scholarship, so I got out of the Coast Guard and just went to school full time. And so that was the best last minute decision of my life. Hawaii is great for anybody who hasn't been there. I highly recommend it. Highly recommend it. Probably not a good place to live because it's so expensive, but to visit, go to school, definitely a good choice.
So what happened after that? The investment company? Did you stay there long?
Well, I did. I stayed there for about 8 years. And then, at the end, a lot of the principal partners, they were older. The main partner was, in his late 70s going into the 80s. So everybody had a kind of a different idea of what they wanted to do. Ultimately, we split the partnership in the company, split up the assets, sold some assets, and, everybody kind of went on their merry way. In that kind of transition, I ended up with the Texan Ranch Apartments, which was one of our larger projects, and it was also very unique in nature. So it was a extended stay hotel built in the 1920s. So the effective age is pretty old. We converted it into an apartment complex because I think we operated for like 3 months as a hotel, and I was like, this is a nightmare. I don't want to do this type of business. So because of the age and because of how big it is, it's 20 acres, it requires a lot of overhead and a lot of operational oversight. And for that reason, I kind of just rolled my equity into that deal, took the deal, and then went on my merry way.
So that became your property, your deal.
That became my baby. I mean, they were all my babies. I don't have any children. I don't have a wife, so this is where I spend my time. But this one in particular took a large part of my time, and rightfully so. The old owners were the Davises, who are family friends of ours, and they did a fantastic job building this property. It's a historic marker. It has a lot of character. So I was very fortunate to have the opportunity to continue that legacy. So that's a legacy asset for us, along with some others that I have in my portfolio, some mobile home parks and single family rentals.
You still own that, yeah?
Yes, I still own those. That coupled with my mother, she has her own portfolios, and we work together in unison to kind of operate, maintain. We're vertically integrated, so everything is, in-house management, in-house construction, in-house maintenance. So we really are a very small and lean team, and we stick our hands in everything.
That's amazing. I won't bore you. It's your podcast, but I owned a holiday park for a couple of years in the
You
UK.
understand?
Yeah, it was good. Really, I was very inexperienced and I didn't make the best of it. I had a 6 acre beach,
Okay.
and but it failed because we tried to get planning permission on quite a few things, and we were led to believe we'd get it when we bought it, and then they refused it. And then, trouble is, it was predominantly run by, owners who owned the chalets or properties, and they just didn't want to play ball, so they made it very difficult to keep managing. But
I've
yeah,
heard that story
I would
before.
buy another one if I came across a good deal.
I've heard that story before. I know a lot of investors, owner operators who, man, they've really hit some resistance from the city, from the planning department, and I never understood why. Let business run free, and it always helps the community, but it happens.
Well, on this occasion, and I won't go on about it, but they went out to sea about a mile out and said the building we wanted actually to renovate and change would become an eyesore from a mile out at sea. Seriously. And they refused it on that basis.
That sometimes they don't make any sense.
And 10 years later, someone else had obviously bought it, and then they then approved it for an upmarket hotel, which
Yeah.
more than covered. But when they sold it, it more than covered the cost of the whole deal by about 5 times.
Whoa.
So it's
Whoa.
about timing. It's about having the right people on
Yeah.
side, etc. I mean, we have the vision, but we have the wrong timing, the wrong planners, etc.
All the stars need to align for a business venture to work. I was talking with some friends about it. Entrepreneurship is a brutal game, and it tests your faith time and time again. You're tested by the market, by competitors, by your team, by change, which is ongoing. And so you really find your faith. And for me, I've been fortunate. God has been, He's giving me a lot of grace, and He's allowed me to kind of build upon that with very little resistance. Hopefully, he continues. But yeah, I understand.
Yeah, no, entrepreneurship is a marathon, I think, and if you read social media, you'd think it was a sprint because everybody's getting rich overnight on social media, but in real life, it's a marathon. But tell me, you operated your own firm for around 9 years.
Yes.
What else was you doing in that 9 years?
Oh man, I did a lot of things. I was a semi-professional race car driver, if you can believe that or not. I say semi-professional because I never won and I never made any real money, so I can't really be a professional. But I did race and drift competitions in Texas, competitively, obviously, for about 6 years. My original degree was in automotive engineering. So, I was building race car motors until I realized there was no money in that, and it was soul draining. But I did that, and then obviously I was in Hawaii, so I surfed a lot, snowboard a lot, so I was a bit of an adrenaline junkie. All that kind of came to a hedge when we sold the company, and then I really had to get focused. Came to Dallas, got my MBA at SMU, and then, been working with Willowood ever since.
So, what made you sell the company and look to move into something like Willowood?
It was more the partners, right? So my partners, they wanted something different, and we all couldn't really agree on a vision. So it happens naturally. I think 8 years was a long run, and we had a really good run together. So no problems with them. They're great, but at the end of the day, everybody wanted something different. So we just kind of split the assets accordingly. Everybody was pretty nice about how they wanted to go about it. So I took the operationally heavy asset. They kept the easy ones, like some retail centers that were fully leased up, on triple net leases, some vacant land, some apartment complexes that were 20 units, easy to manage. So they took all the easy stuff. I kept the operationally heavy asset. And then that was it. And then I didn't really know what to do after that. I kind of sat at home for a while. My sister went to SMU. So I was looking for new things to do, and my sister was like, "You should go back to school." And I was like, "Dude, I'm old. I'm 30. What am I going to do in school?" She was just like, "Go, get your MBA. You'll really like it." I ended up going. I spoke to the program director, Joseph Cahoon, and Wally. who's at SMU running the real estate program. Fantastic group of guys. I'll tell you, I will bleed for that program. They did a great job. It's a fairly new program. It's the real estate program there. All the professors are adjunct professors, so they're not actual, like academic professionals. They are professionals in the workforce. So
Proper
we would
business
have
people.
yeah, we would have classes kind of in the evenings, and they would get out of their job and they'd come in and they'd be like, "Here's the real deal. I mean, we're gonna cut the crap. We're gonna get rid of all the stuff that doesn't make sense. We're gonna tell you what's happening right now and how to navigate this world that we're in." And so I'm drinking the SMU Kool-Aid. I mean, you can see I got the hat on, so I represent that school till I die. They did a fantastic job. If anybody wants to really understand the ins and outs of real estate and get an institutional knowledge behind some of their experience, I would highly recommend it.
Tell me, then, that makes me interested. Did institutional knowledge, i.e., learning at college, teach you as much as the school of real life?
You know, I don't know if it taught me, um, anything new. I think it provided institutional knowledge with things I had already experienced, right? And so it created this new language for me to now be able to go into the institutional space and understand what people were saying when they were talking about, cap rate compressions and things of that nature, right? I saw it in real time. And so it allowed me to sit here and be like, here's an experience that I took on, and here's the institutional framework behind it. And it really helped connect the dots for me. I think it made me more well-rounded, and I can understand now some of the different plays that maybe in the past I didn't understand. I see some of these bigger institutions, they were making some moves, they were maybe doing some developments or some build to suits, and I didn't really see the value. After going to school and kind of seeing the framework of how some of these plays work out and some of the strategies, it's better informed me. It's provided me a little bit more knowledge, and it's allowed me to play in a much bigger pool, which maybe before I didn't have access to.
When you work for yourself, obviously 9 years is a long time. You learn a lot. What did it teach you that put you in good stead for working then again for another institutional type entity?
I think it showed me how to be a team player and how to lead. When you're young, starting off, you think you know everything, and I think as I went through that process, I grew personally and understood, it's not a one man show. It's absolutely a team driven sport. So building a good team, having a good culture, setting some good values for the company and a clear vision. I talk about business and real estate, but business in general is like a pirate ship. You could be the greatest captain in the world, but without a crew, that ship is never leaving the harbor. Vice
Yes.
versa, you could have the greatest crew in the world, but if you don't have a captain setting the heading, you're going around in circles. So it absolutely takes a village, and I think that insight has allowed me to work at a firm like Willowood and really be able to mesh with their already built infrastructure and their team, and try to find what holes or gaps I can fill. How do I add as much value as humanly possible? And I think that's really worked well for me. Anybody else who goes into a big company or even a small company, it's like a bunch of group of friends, right? When you get into a new group of friends, you got to add value to the group as a whole. Otherwise, you're not going to make it. So that for me has been really beneficial.
Tell me about the operator's playbook. Obviously, over your 9 years working, running your own businesses, etc., you put together a manual. Tell me about the manual. Tell me about the operator's playbook, etc.
Yeah, so the operator's playbook is a funny story. Obviously, it kind of came to be with the private equity firm that I was heading before, and we would get new managers, and it was a rotating door, right? So in the beginning, I would personally train the managers, and after a while, when we got big enough, it became too time intensive for me to sit there physically with them and show them step by step how everything worked. And I learned that there were times where I would teach them something, but maybe it wouldn't stick, and they didn't have a reference point, and they didn't understand the full scope of their responsibilities. So over time, I created my manual, and I condensed it into a 30-day course. It wasn't really a course. It was, hey, you're going to be basically in probation, right? Or a training period, for lack of a better word, for 30 days. this is what I want you to accomplish in these 30 days. If you can accomplish these things, then you're hired full time. And if you can't, well, then, this is not a good fit for you. So over the years, I've accumulated this and, refined it and honed it. And then I had friends in the same business who would call me and say, hey, you have some good managers. And I had fantastic teams. I can shout out some of them, Adriana Salceda, she's a great one. Selena is also a good one. I had fantastic teams, and they'd be like, hey, how did you build these managers? And so rather than go through the whole song and dance, I just give them the manuscript. It was on a Word document. I wasn't trying to gatekeep it. I just handed it out to friends. And it made the rounds, and it hit one of my friends, and that's okay. And it hit one of my friends, and they have a publisher. And the publisher called me and she said, hey, this is great. We should publish this book. And I didn't know anything about publishing books. I'm dyslexic, for Christ's sakes. I don't read that many books, period. So she really helped me through the process, and she got it published. And I'm really grateful for that. And I've gotten some good feedback from it. I've had people call me, you yourself, and tell me good things about it. So, I was grateful for that contact.
A lot of people can underwrite a deal on paper. What does a genuine operator see that a pure financial buyer might miss?
I think to be a good operator, you really have to care about the customer. And I think for real estate, people get that confused, right? They think you're delivering a product. Well, yes, you are, right? You're giving them a place to live, but you're also giving them a service, right? People who come to rent want to feel like this is their home. It's their community. So having a focus on the resident experience, I think separates a good operator from a bad, right? There are a lot of facets to operating. You got to be able to, manage your time and collect rents, do maintenance and repair, have a long-term vision, market, customer relations. But if you can figure out how to create that culture where people feel at home, then you will probably have a good outcome, because things happen. People lose their jobs. They can't pay their rent, or maybe somebody goes to the hospital and they got to focus on that instead of paying their rent. If you have a good relation with the tenant, then more than likely the tenant will catch up, or they'll give you a game plan, or they'll keep you informed. If you don't have a good relation with the tenant, then they skip and they don't talk to you and they destroy the unit. And so it's very black or white, right? It's either you've created a good corporate culture, or resident experience culture, apartment culture, or you have it. And for me, I think that really separates the successful operators from the non-successful operators.
Well, when you look at real estate overall as a profession, as a career, as a job, obviously you're investing, you're looking at opportunities. What sector do you find in real estate the most exciting? And the one with the most value?
Yeah, the most exciting is probably the most nerve-wracking, which is that it's ever changing. Like, it's always changing. Before it's like, hey, multifamily was the hottest commodity. Now multifamily is getting squeezed and it's dying. Industrial wasn't a hot commodity 4 years ago. It is the biggest booming asset class right now, right? So the state is always changing. You always need to be on your toes. You need to be constantly in the market, talking to people, getting different ideas. There's no straight line in real estate, in the sense of there's not just one play. Like, hey, here, if you do this, you'll turn out fine. No, there's alternative asset classes, right? Like, you can do flex space, you can do mobile home parks, you can do tiny home villages, you can do Airbnb, you can do, senior living, you can do event centers. So there is so much wide variety of paths that you can take in real estate, right? There's not just one way to bake a cake or split a pie. There's a million paths. And you could have success in one or multiple ventures in that path. And controversially, you could have a lot of failures, right? Because maybe, like yourself, you were too early. It didn't mean you have a bad business model. Didn't mean the location was bad. Just meant that you got there early and whoever was in the planning and zoning department didn't want to work with you. Not your fault. But this is the reality of real estate. All the stars need to align for something to work out. So when you see a building going up, understand that, someone or a group of individuals had to really move all the pieces of the chessboard just in the right area for this to be able to become a reality. It is not for the faint of heart, but it is very cool to see. And so when I see new asset classes coming up, it's always exciting to figure out how did they come up with this vision. How did they work with the city or the county to get these things passed, with the members of the community, with investors. So it's, real estate is always changing. It's a lot of fun. It's a lot of stress, that's for sure. I don't sleep that much nowadays, but it is a cool space to be in.
If you're looking for yield, what's hot right now? If you're building a portfolio, you got investors, you want to give great returns, obviously for yourself and them. What's hot right now?
Right now, it seems like industrial development is hot, right? There is a sweet spot. I have a friend who's in the industrial development space. It seems like, bigger than 1 million square feet is where people want to be at, which sounds crazy. Smaller than 1 million square feet is really not feasible, but it seems like development is taking back off again, which is good to see, because for the last 4 years it's been pretty stagnant, right? But now we're seeing an issue where things are getting overdeveloped, right? I mean, you have Austin, which is oversaturated with apartments. Dallas is oversaturated with apartments. Even the Rio Grande Valley, where I'm originally from, is oversaturated with supply. And so trying to find that balance. Personally, I think if you want the greatest return, the game has changed, in the sense that maybe a couple years ago it was a cap rate compression game, right? So investors would buy a deal at a great basis, they put some repairs into it, natural appreciation would happen and natural rent growth, and so the property would get, but be higher valued, and then they sell it. No real work needed behind that. Now the game is different. It's an operator's game, right? So the resident experience is the most important aspect of any real estate deal. Like, I don't care what it is. You want to be in retail, right? Ensuring that you get the right tenant mix and ensuring that the customers who are shopping at those places are having a good experience is going to determine the outcome of that asset. Apartments, are your residents happy? Do they like where they're living? Because if they don't, they're going to give you bad ratings. They're going to destroy your unit. They're not going to pay on time. Hotels is the same thing, right? Airbnb is the same thing. So, focusing on the customer, I think in this day and age is really where it's at. We're going back to that. The customer is always right. But look at the bigger companies. Amazon focuses on the customer. They had great success. Tesla focuses on the customer experience. They're having great success, considering the fact that, it's an electric car company. Who thought that was going to be successful? So I think if individuals focus more on the customer experience, regardless of the size, I think they're going to have a good outcome. If you have 4 Airbnbs, but you're making it fun for your customer, you're probably going to be successful. If you have a hotel and it's small, but you're giving everybody a really good experience, maybe the one that they wouldn't have at a bigger hotel, then you're probably going to be successful. It's a lot of work. The margins are shrinking, but that's where I'm seeing the success. And we're seeing it in real time at Willowood, where we have the data. And we've come to the understanding just recently, probably in the last 4 months, that, being in the right submarket and providing the absolute best resident experience we can possibly provide is going to provide us with the greatest return on our investment. And it's a win-win for everybody. It helps the investors, it helps our operating team, it helps the customer, it helps our brand. And if you try to get away from that, you're going to feel the pain.
Just one question. I've got a couple of questions actually, but I never asked. One is, where can I buy your operator book?
You can buy it on Amazon, actually. So
All
it's easy. Just type in Operator's Playbook. You just look for my name. I know my publishing team is actually working on my second book. It's already done, but they're very good. They go through it. They make sure I don't have any misspellings, and they add illustrations to make it fun. Obviously, like I said, I'm dyslexic, so I'm sure some of my wordage is off, right? But it's on Amazon. It's a fairly cheap book, but I invite everybody to buy it. And if you think something I put in there is wrong and you want to debate,
yeah, I will buy it after the podcast. Tell me also.
I'll give it to you. Don't worry.
No, I will. I'm interested in real estate anyway. So, yeah, I'm sure I can learn from it. What's your second book called?
It's called the Fundamentals Playbook. I'm actually doing a playbook series, right? So it was originally going to be operator, investor, and development playbook. And while I was in school, I started writing the investors playbook, and I'd hand it to friends and family and be like, "What do you think?" The concepts were so foreign to people who aren't in the real estate space that it made it hard. And so I had to take a step back, and I talked to some friends of mine, and they said, why don't you make a kind of fundamentals book so that people can ease into some of these institutional concepts? And so that's what I did. So I created the fundamentals playbook, and I basically took, I'm sorry, SMU, right? I basically took all the institutional knowledge that SMU and that I've learned over the years and coupled it with my experience. And so I get to show people, hey, here's an institutional concept, right? Like a waterfall model or capital distribution. And this is how I experienced it in my real life. And I give them real world examples with real numbers and real assets. And some of the examples are failures that I've had, where I'm like, hey, I got into this deal. I didn't do the due diligence properly, and it ended up being a bad deal. And so I try to be as transparent as I can in the books. It's not ooh, look at me, I'm doing great. It's like, hey, this is some of the experiences I had, and in hopes that somebody else can learn from those experiences and not have to make the same mistakes, and just try to share the knowledge, and so other people can be, even more wildly successful than maybe I have been.
So we're talking about yields and we're talking about different markets, etc. I speak to quite a lot of people in real estate, and the thing that keeps cropping up, whether it be in Canada or the US recently, is rent to buy.
Yeah.
People actually, some developers or builders developing and then renting out with people buying in 2 years' time or 3 years' time when they can afford it. Other people actually buying up property and doing a rental scheme, having the mortgage ready for them in 3 years' time when they qualify. Well, what's the, you see much of that or talking much about that out in Texas?
Absolutely, absolutely. I mean, that's why I'm saying the multifamily space is getting hammered, like absolutely hammered. I mean, we're seeing negative rent growth, right? So that means rents are coming down year over year. And I spoke to, Willowood has some JV partnerships that they do. So I was speaking to an asset manager on one of our JV teams. He has some assets in San Antonio, and for 4 years straight, the rents have been going slowly down. I mean, we're not talking, from $1,000 to $500. We're talking like from $1,000 to maybe the next year being 920, 880, 860, 800, right? But when you have a 400 unit deal and your rents have dropped $200, that's massive. Now what do you do as an operator? Well, you start firing people. What does that do? That starts lowering the resident experience. Then you got to start giving cheaper rents. Then everybody around you is hurting, so concessions go up, your rents go even lower. It's a vicious cycle, and we're seeing it in real time. And I think that conversation is what led Willowood. When I came on board, we did a massive data pull for internally, in all our deals, and said, okay, which properties are doing well? Why are they doing well? What properties are doing bad, and why are they doing bad? And I think the only controllable factor that we could, pinpoint is the customer experience, right? Because outside of that, we have no control. We can't control what the apartment complex across the street is doing, and if they're providing concessions or if they're cheaper than us, and we can't, really lower our rents too much, or the asset just doesn't perform anymore. So
Sure, and I would imagine a lot of the assets are funded, aren't they? I mean, you
yeah,
can't own them all outright. There
that's
comes
right.
a point when they're not going to be profitable at all.
100%. So, the rent growth is, the negative rent growth is real. You got that plus increase in property tax, increase in property insurance, increase in wages, inflation is through the roof. I mean, the margins have just gotten so much tighter, which leaves no room for error, which is why I said, like, dude, this is an operator's game. Like, you got to be on your toes, Buy the operator's playbook, read it. I don't really care, but you really need to be on it, to make this business work right now. Maybe in the future that's not the case, but for now, it's absolutely war out here, and you need to be out in the trenches, fighting every single day to provide the best product and the best service at the best price.
Tell me about Willowood. We haven't actually spoken a lot about Willowood. Like, what does it do? How does it operate?
Yeah.
What's its long-term goals? What's your long-term goal in Willowood, etc., etc.?
Man, Willowwood is a great company. John and Robert are the principal partners there. They're pretty young, not as young as I am, but still very young. Also SMU grads, and they're just a fantastic group of guys. I mean, wicked smart. Robert is kind of like the deal finder, money raiser, and John is the problem solver, operator. I call him the quants, right? The quantitative. He's deep into the numbers. I mean, they both are, but they make a really good syndicated team. And I was very fortunate to be part of that team. I actually met Robert through SMU, through the program. Believe it or not, the SMU Real Estate Club, which is more for graduate students. The Folsom Institute is what it's called. They have these roundtable meetings. So Robert came and attend. I had the president of the club call me and she said, you need to be more involved. So she forced me to go to the meeting, and that's where I met Robert. We talked a lot. He does multifamily. I've done multifamily. And Willowood, they find an asset, they'll go raise the capital, right? They're the general partners, right? So they're operating the asset. And because of their scale, they have started to get third-party managers to manage their assets. So when I found that out, I kind of just whipped out my book like I always do, and I handed it to him, and I said, hey, read this book. I hope it provides some value for you, and I'm sure you guys will knock it out the ballpark. And then he calls me back, and he's like, I don't really want to read this book. I'd rather just hire the guy that wrote the book. And so there we go. We went out to the races, and it's a very lean team. Within Willowood itself, it's just us three, right? So it's just Robert, John, and myself. And these two guys, before I ever came on board, took this from a concept to now they have a $250 million portfolio, and we're, right at about 3,000 doors. It fluctuates because, since the time I've been with them, they've sold 3 deals and they bought 2 deals, and, they're always wheeling and dealing and growing and moving. And so it has been a really great experience for me. It's allowed me to kind of sharpen my claws. I get to practice some of the things that I learned and maybe they haven't seen, but then I get to see some things that blew me away. I mean, John's implementation of AI within this space is unreal. I mean, he can produce at a level that I've never seen anybody else produce at. And, Robert's ability to be able to syndicate capital and deal flow. I mean, this guy is finding deals like a machine, and that's really cool from my perspective because deals kind of just come. I wasn't really actively looking in the space, but with these guys, they use real data to find, hey, this is the market, this is the asset class, this is what everybody wants, and then we're gonna go create it, and then coming up with creative solutions to problems to improve that asset, because a lot of the times there's very little improvements. I mean, I'm sitting right now at one of the new acquisitions we just got a couple months ago. It's at Fort Worth. It's called the Reserve on Willow Lake. It's beautiful, 138 units on a lake, but their strategy is ever changing, right? Before it was, they have some bigger deals. They have 400 units, 500 units. And they're seeing, when we did the research together, all three of us, was that, hey, smaller deals in better submarkets with a better class of tenant is going to give us a better return. It's going to be more work, but it's going to give us a better return. And they are executing it in real time. So it's really cool to see, how a small group of guys are so innovative constantly,
How do they get their data?
They get their data from various sources. So we have a lot of internal data, right? So, we have 3,000 doors. And so from there, we're able to see, right, which residents are paying, which ones are late, what applications, what's a good application look like versus a bad application, because it's not always evident, right? I mean, people's credit are fine, you know what I mean? They don't have any eviction history. It doesn't mean, really anything. So we have to try to find the patterns within our own respective data. And then Robert and John are very connected, so they have a lot of friends in the space, and everybody shares information, right? I know they have conversations all the time with people, and they're like, hey, this is some of our findings, and what have you seen in your space? And so it's an ever going conversation and exchange of information that really informs them on their decisions. And we use a lot of tools ourselves. I mean, I'm always sitting with John. We're creating new tools every day. We create like AI buy boxes, which will just funnel deals through there, and it will tell us, it will rank the deals for us. We have it for retail, for multifamily, for mobile home parks. We have all kinds of AI tools that we're creating in-house. I mean, we're not buying tools from other people. We're making our own dashboards. We're making our own systems and processes. So, sometimes I feel like we're more of a technology company than a real estate company just because of how fast we're innovating. But they've done a great job. I mean, they've scaled this to a much larger version of what I created. So I'm very fortunate to be working with them.
How do they raise their cash, their funds?
Through investment partners, right? So every deal is different. And I don't have all the insights on how they raise capital. That's kind of a Robert trade secret. But from my observation, on a smaller deal, maybe it will be a high net worth individual or a family office. On a much larger deal, like this one, was a little bit larger in terms of price point. We had some institutional buyers, right? California, New York. They come in, right? They'll put up the capital. They're the limited partners, the LPs. Willowood is the GP. And so we put up our end of the money, and then it's off to the races. And it is a tight timeline. I'll tell you, when we close this deal, 60 days, and they have a 90-day list. They're like, we want roofs done, foundation done. We want all these units turned. And my role within the entity is, yes, I'm an asset manager, but I'm also have a GC license. So I'm registered at Fort Worth in Dallas as the general contractor. So I head all the contracting and CapEx work. So just today, I was out before I came here, I was out on the roofs. That's why I'm wearing a long sleeve on a hot day, inspecting all the roof work that just got done. We just raised 4 buildings, with some foundation companies. I mean, there's some serious work going on in the background, and we have very tight timelines on when these things need to get done. But I think we got a good team, and we're knocking it out.
What happens if you get an asset that obviously you're looking to get good yield from and it doesn't quite work out? How do you turn it around? Do you move it on? Do you sell it? Or do you try to change its use? How do you deal with that?
So every asset is different, but we have, in my time here, experienced that on multiple occasions where the asset's just not performing, and so we try to come up with creative ways to fix that, right? So the question is, why is it not performing? Is it not performing because there's deferred maintenance, right? So how do we take care of that? Is it not performing because of occupancy, right? And if it's not performing because of occupancy, well, then there's some creative things to do. So one thing that we worked with is we worked with a company named Forward Housing, who's a nonprofit locator. So they work with nonprofits, and they find, maybe there's a mother and child who were part of a domestic abuse, right? So they will pay for that person to go into a unit, and we help them, obviously by providing discounts or whatever we can to help, find housing for these individuals. We work with universities to house their students. We try to implement what's called a hero program that works in some areas and not in others, whereas if you're a police officer, firefighter, teacher, professor, nurse, if you serve the community in some form or fashion, we give you a discount, or we help you in some way, right? Whether it's if you need furnishings or if you need something, then we try to give you the best experience we can give. For deferred maintenance, it really falls on me, right? If we feel that something's getting behind in maintenance and needs to be cleaned up, I have my own team, my own construction crew, and we get in there and we really, try to repair this or build new at cost, right? So at no cost to Willowood, they're just paying whatever the materials and whatever the labor is to turn that around. So it's an ever conversation. If the asset is too bad, which thank God we have never, that I've seen, been in that situation, then we may be in a situation where we need to push to sell, right? And we're seeing that though across a lot of different other firms. Some assets just aren't making sense anymore. I've seen valuations go from 40 million to 30 million. So you've lost 10 million in worth, you got to let go of the asset, dude. You got to cut the string before you go down with the ship. And that provides a good opportunity for new people coming into the space. Now they get to buy that asset at a discount and try their hand at making that work. So, I think right now it's a natural forest fire. It will trim the fat off the people who aren't real players and open the space up for new players to come in. And thankfully, Willowwood is very, very good and very, very smart. And I believe in the company and the products and services they give. So I know they're players and they'll survive. And, we can have a new Coliseum with new players and may the best man win.
Is everything done internally, or do you contract out?
Um, we mainly contract out, but we are moving more vertically integrated. So, all our asset management is contracted out. We partner with asset management companies, but we're very involved, probably more involved than the asset management company would like. At least I am. So I definitely like to see behind the curtain. But a lot of the CapEx work, if it's licensed, right? So electrical, plumbing, HVAC, roof, foundation, those are licensed professions. So we contract those out. But unit turns, right? If it doesn't require a license, we typically do that in-house with my team. And so, but it's still a lot of fun to work with a lot of different individuals. Sometimes we have more units than we know what to do with. And so I will partner with other smaller GCs, and we'll give them 20 units and I'll take 20 units, and we'll have a friendly competition to see who can turn the units better, faster, cheaper. I don't always win. That's a fact. I've lost on a couple of those competitions for sure. Some guys produce better work at a cheaper price point, but we try to be as vertically integrated as we can, while still maintaining our true heading, which is acquisitions and growth.
But when, as an investor, if you're invested in Willowood, do you get a choice of funds or a choice of where you can put your money? And are there all different yields per fund, or some riskier than others, some more moderate? How does it work?
Funny you should ask that. So, before I talked about some of these tools that we created in-house, these things called buy boxes. These are AI tools that we make, right? So, for instance, some of our investors would like some diversification within their investments, right? Willowood is mainly focused on multifamily, but some of them want to invest in retail. And so Willowood has gotten together. Like I said, we're three guys, so getting together is not a big event, but we get together and say, okay, how do we create a tool that would allow us to source and funnel deals for retail spaces so that we can give our investors the best choice? And so what we have actually created, and John and myself worked on this very diligently, is like, here's an AI tool. We give it deals, and then based on all this market data that we have funneled to it and some parameters, it will rank the deals. So we were like, hey, some guys like, hey, I want retail, I want it, sub 10 million, right? I don't want it more than 30,000 square feet. I want to be in these areas. This is what I want. We'll go and we'll look for that deal. And then we'll put it through our buy box. Will give us a whole bunch of data, and then we take it to the investor. It's an actual app, and I send the link to the investors, and they can play with it. They can move the metrics around. It's very interactive. It's a whole lot of fun. It's kind of like a video game. And they say, hey, like, I like this, and I'm like, great. Like, move some of the toggle switches, which is, for us, it's like move some of the levers and see how the deal operates, right? Is it going to be good in 5 years? Is it in a good demographic? Is it in a good submarket? And so it provides a different outlook for our investors, right? Now they feel like they have a say, and I think it's been really cool to see Willowood implement that. And we're doing some deals right now based on that. We let the investor kind of choose. We're like, hey, these are our 3 recommendations. Which one you like? And they're like, we kind of like this. And then we talk through it, why is it a good deal and why is it not a good deal? This is some of the inherent risks with this deal, and the investor is more informed, and I think it's a much better process versus what I've seen in the past, which I've seen in the past is like, you give us money, we buy whatever we buy, like you just have to deal with it,
Well, it's probably a very good guide for you if you know what the investor's looking for and what their risk appetite is. It actually gives you a good idea where to place your money. So
Correct, correct.
It gives you direction at the same time. If before we wrap up, because we've been talking quite a long time, just tell me what's the future for Willowood? What's the direction? What's the plans? Where do you see it going?
Yeah. You know, I see a bright future for Willowood. We're talking about hitting tertiary markets, so other cities outside of Dallas, watch out, because we're going to start coming in, we're going to start buying everything.
Are we going outside Texas?
No, just outside of Dallas and Fort Worth. Right now, that's where we're centrally located, but we're going to
Right.
start branching out, So, my hometown of the Rio Grande Valley, be careful because we're going to come over there and we're going to buy some stuff. Um, they're also diversifying into, like we just talked about, into retail. They have some industrial plays, they have some ground up development plays. So, it's all kind of under the radar right now, but their ability to adapt is unmatched, truly, and I'm happy to be a part of that team. But they recognize opportunity and then they dive in head first and they doing a lot of cool stuff. So we're going into different markets, different asset classes. We're going into development. And so I think it's only a matter of time before this company blows up. When it goes public, I'll let you know beforehand, so that way you can invest in
Yeah, let me know. I can buy the pre-IPO. Sounds exciting, Kenny. Where can listeners find you, and where can they find out more about Willowwood?
Yeah, follow. You can follow me on LinkedIn, right? So Kenneth Chandler is my name. It's Kenneth Joseph Chandler. You're more than happy to follow me, message me. Willowwood is on LinkedIn. Follow them, message them. We're all active on there, so we'll see if you guys message us. You can reach out to Gary and check out his podcast. I've seen a few. This guy's very smart. He is smart. So reach out through various ways. Any way that I can help, I'm always happy to help people.
That's fantastic. When's your next book out before we wrap up?
Whenever the publisher gets done with it, I'll be fair to them. I have rewritten the fundamentals playbook like 7 times. It's been done for 6 months, but I've been making changes, and my poor publisher is going insane. She's just like, enough with the rewrites. Like, just publish the book. It's over. So it's finally complete. It's been complete for like 2 months. They got other things they need to do, so it's on the back burner, but they'll get it out. As soon as it gets out, it'll be on Amazon. Fundamentals Playbook, check it out. So,
Just tell me for my guide, I wouldn't mind writing a book. How difficult is it to write a book?
you know, very, very difficult. I'm gonna be honest with you. The Operator's Playbook was different because it was an internal manuscript to train people. The Fundamentals is an actual book. It's taken me 12 months to write, but 12 months of like every weekend, like I'm rereading it. When you reread your own work, it's maddening. It's maddening because I'm like, dude, is this really how I sound? I was like, some of these concepts are dumb. So it took me a long time, but I think if you have something to say, I think it's worth putting it out there because if it helps one or two people, like it's worth it. I've read some books that changed my life. And so, if I can put it out there, maybe my kids can read it the day of tomorrow or my grandkids or somebody. And if it helps, great. It was worth the time.
I think my book would be interesting because people say you learn by making mistakes. And I've made so many, and I think I could clear up all the problems anyone could ever think of.
No, but I'll tell you what, hey, if you ever want any help, like let me know. I'm always happy to
Yeah, I
help.
will. It's something I really, I'm thinking. I've interviewed so many people that have written books recently. And I do think, apart from probably being personally, really rewarding, I think in business, etc., to actually put a book out about what you've done, what you haven't done, and what you should have done better, is great for listeners and great for people to understand and learn from.
Yeah.
Because they say we learn from our mistakes, and I think that is true. We don't learn from our successes. We learn from our
Amen.
mistakes, and I think if you can forewarn, you're forearmed.
Yeah, amen. And look, if you read a book, maybe your kids, you know what I mean, are like, we know our dad, so we don't need to read this. But your grandkids or your great grandkids,
Yeah,
I want to
no, I
know
agree.
might want to know you, and that's a great avenue to be able to get that to them. So, but I appreciate you bringing me in on the show. Seriously, thank you.
No, it's brilliant, and I want to thank you for being on the podcast. We'll be publishing this in the next couple of days.
Yeah.
Kenny, I just want to tell you, but it's been a real pleasure. I'm just going to sign off now, and we'll talk in a minute.
Okay.
But please look up Kenny on Willowood's website.
LinkedIn.
Look him up
Yeah.
on LinkedIn. You know, read about Willowood. They sound like they're going places. If you've got money to spare, I think Willowood's the place to put it. We've got to watch out for the IPO. It's going to be big stuff. I'm Gary Wayne, A1 Solutions, signing off. I want to thank everybody for listening. I will be back in a couple of days with something more. Kenny, once again, great to have you on.
Thank you.
Really a privilege. We'll talk in a minute. Thanks very much indeed.